So next we have Oscar. And Oscar, just anticipating that you may want to show us some slides, etc., I have made you co-host. So please
Okay,
go ahead.
thank you.
Yeah.
Thank you. I will be brief, as Alexander said. I will be very brief. Let's see if I can make this grow. Yes. This is what debt crisis look like since 1825. You have a rise in international interest rates, a drop in export revenue, and a fall in GDP growth and tax revenues. And that leads to a cease payments. That's a classical debt crisis over time. What we now have is a shutdown of China in February that led to a shutdown of production. The supply was shut. And then we were locked in. So demand was shut. That has never happened in history. And that led to a second quarter collapse, a tax revenue collapse. And then we had China reopening. It reopened first and fast. And that has switched the world economic dynamics from the West to the East. It was already going towards the East, but now it's clearly the West has an economic contraction. China is growing, and it's growing fast. The rest of the world has been left with a contraction. Now, in Latin America, this is the average is 9 years. We lost. Look at the right side column of lost years. Jamaica lost 24 years in the second quarter. Belize lost 15. Brazil lost 12. Argentina lost 11. Mexico lost 10. Salvador 9, etc. This severe loss of production was followed by a very fast recovery for some in the third quarter and no recovery for the others. So Brazil recovered all of its loss in the third quarter. Nicaragua as well. We don't have the policies, the data is not available, but we know it recovered. The data for GDP is available. Colombia recovered what it lost with very little fiscal and monetary policies. Peru recovered over 60%, nearly 70% of what it had lost, as did Paraguay, Panama. Mexico recovered 40% of what it had lost with very shy public policies. Chile did not recover, to my amazement, in spite of the massive 20% injection of resources between monetary policy and fiscal policies, yet it did not recover its economic dynamics. That's very unusual.
But it shows that it has.
It shows that
Chile has the biggest upswing.
This is public policies. Monetary is the yellow, and fiscal policies.
I got it. Yes, yes. Okay.
And the line is the years recovered, and they have recovered 10% of what it lost, a bit over 10%.
Yeah.
Ecuador did not recover; it did very little, and did not recover much. Nor did Jamaica. Argentina and Costa Rica recovered nothing, so they're stuck down. And this has been, I'll jump that. We had a drop in selective consumption taxes. This is from February to March, minus 2.3, April, minus 37.3, May, minus 42.9, and June, minus 31. VAT also contracted, as you can see, from March to June. Income tax, we have it from April to June, minus 28 down to minus 19.9. Now, income taxes, this is what is actually paid. But as we know, income taxes get paid at the end of the fiscal year. So it'll be the March numbers that we have to look at. The way fiscal policies have been financed in Latin America in recent years, if you look at the blue line, that's internal debt, domestic debt, and the green line is external debt. As you can see, the blue line is very important for most, and the green lines are important for the smaller countries: El Salvador, Ecuador, Honduras, Nicaragua, Paraguay. So this important domestic finance, and it is very important, means that what we're facing at in the near future is a domestic problem. We have not had, and that is very peculiar, we have not had a collapse in export revenues. I expected a massive collapse in export revenues, yet commodity prices after March the 18th, 2020, when the Fed injected money to the investment houses to recover the stock exchanges, that pushed commodity prices up. So there you are, it's up, and it's up 30%. It's not only up, but it's substantially up. Trade, this is the global container index, has recovered. International trade has recovered. So we have this odd combination of a domestic economy shut down, an international economy growing, with growing prices, in spite of the fact that the only element for prices to grow in real terms is China's demand. But it's not China's demand that is pushing prices, it's the interest rates, which are at near zero. I also expected, these are exchange rates. I expected the instability of the period between the end of March and the end of May, which is between the two red lines here. I expected this to remain. When I told my assistant, look at the exchange rates because they're going to become unstable in March and they're going to remain unstable. And he comes back and says, they were unstable and then they stabilized and recovered. So what do you mean it recovered? And there it is. Exchange rates recovered. There's a 10% adjustment and that's it. This is basically here. Chile went back to its original point. So it's back to the line is under 100. It's 9. These are index numbers. This is 98 in Chile. The rest are in the neighborhood of 110. It's a 10% depreciation. Only Brazil has a massive depreciation of nearly 40%. Now, where are we going? We're going to a ratio of debt to GDP, as you can see here, that is serious for 6 countries, and it's not so serious for the rest. And this debt ratio of debt to GDP includes domestic debt. So basically, what we are going to face is a new type of problems that have to do with domestic solutions to government finance and to a new relationship between central banks and ministries of finance. It is a ministry of finance that is issuing the treasury bonds, and it is going to be the central banks that are buying them. And we're right back to the 1950s. This is what happened after the Second World War. And that was what was then explained as the origins of Latin American inflation. So it's going to be interesting to see how this works out. It's not going to be an international crisis, which is what everybody is warning of, this dire problem of an international debt. And I am being invited to conferences on the international debt problems. And frankly, I don't see it. What I see is a fiscal problem and a new relationship between central banks and ministries of finance. And I want to end by welcoming Victor, Ariela, and Maria, because now there are four of us. That's a lot. See, now we have four Latin Americans here. But yes, that's what I see. And I suspect this is going to be the case not only for Latin America. I suspect this is going to be the case all the way around. We have done the numbers for the G7 countries, which are actually 12 more than 7. And the 12 countries of the G7 look like Latin America. They have debt ratios that have grown. But why did debt ratios grow? Because GDP contracted. Sure, the denominator shrunk 5%, 6%, 7%, and the index jumped. But it wasn't actual borrowing. And the amount of borrowing, which is rather small, was domestic in all cases. The US, France, Germany, Italy, Spain. So I suspect that we're going to see this fiscal problem, and that we might see, for the first time in a very long time, stagnation together with deflation. That's what we're going to see, I think.
Great. Thank you so much, Oscar. Maybe if you can stop sharing, we can go to the discussion mode. Great. Thank you. So questions for Oscar. Oscar, I think you should definitely do another short presentation on the G7, the richer countries and your findings.
Okay.
That would be very good. Thank you. But questions, remarks, observations?
I can.
Yes, Maria, please.
Yes.
And Ariela.
Thank you. Thank you, Oscar, for this excellent presentation about the scenario of Latin America. And I am really worried about Brazil. We're talking about Brazil, what I know better. Indeed, the public debt is the big problem. The fiscal problem of Brazil is really nowadays a big concern, because we do not, because the president had said, I do not know what to do. There is no alternative. So indeed, we are really in a mess here, But my question is about the future relations between the Treasury and central banks. Do you think I am thinking about the future, and do you think that this digital money, these central banks and digital money projects, do you think that this is part of the new relation between Treasury and central banks? Which can be the role of these digital currencies in this new relation? Because I am thinking about this. In Brazil, the central bank has already begun a project in digital money, and I am with difficult to think about this. How can a digital money be a response, an answer to this debt problem? This is one of my questions. The other is indeed the devaluation of Brazil. You show. That it is completely different from the pattern of Latin America, and I would like to know if you have thought about which can be the foundations of this different pattern. Can you which can be different in Brazil from the rest of Latin America to have maintained this high devaluation after March, April of 2020? And I will stop with the third one. In terms of the commodity prices, I would like to know if you think that this pricing, high prices of commodity prices are really part of speculation, speculation, which is the role of speculation is in commodity prices, because it is really very weird to think about the lockdown, the shock, the demand and supply shock, and at the same time with high price of commodity prices. I am thinking that it is purely speculated, which is the role of speculation. Thank you very much.
Oscar, please answer those first, because there are quite a few questions there, Maria. And,
Right.
propose, and then I have a couple, so I will, yeah.
Okay. I have no idea what's going on with the digital currencies. I can observe that we have a digital currencies project in Colombia. There's a digital currencies project in Chile. There's a digital in Brazil, in Venezuela. Now, what are the common denominators of the four? I cannot find, because it is not evident that the four are behaving the same way in the rates of exchange. What is evident in the four is of the strong link between the central bank and the treasury. Now, Brazil, and this is an exception, Brazil has a European debt level. It's over 100% of GDP. Nobody else has in Latin America, because nobody else can afford. Brazil is the biggest country, and it is clearly the biggest country. It is so big, it can have more than 100% of GDP debt, and it doesn't matter. The international markets do not react. Now, why? Well, now here is where it does react. I think, and I am speculating on this. I have the impression that international investors in Brazil that have bought the domestic debt of Brazil in reales have started to sell. They have started to move out. And because they have moved out and not come back in spite of the interest rate, because the interest rates in Brazil are the highest in the world, in spite of that, they are moving out. I have the impression Bolsonaro's policy of having people die to have the economy not fall so much, internationally was not well accepted. Internationally, my impression is the economic numbers look good. The pandemic numbers look very bad, and they are not getting any better, which is a difference with Peru, for example. Peru's numbers are looking a lot better. Mexico's numbers are looking worse. So I suspect we're going to have here in Mexico the same problem as Brazil. The rate of exchange is going to move because foreign investors are going to say, no, this is, I don't like what's going on there. And, the presidents without a mask, that sort of thing, doesn't sell well. So I have the impression that's the point. Now, with commodity prices, yes, I think it's a speculation. There is no reason for commodity prices to be up. My impression of this high volume in trade in the Baltic Index is that you have a lot of commodities now on boats. So you have a lot of cotton and things going around the world on boats, because there is no economic dynamic that can justify a growth of freight in the numbers that we have seen in that graph. There's nothing to justify that. So the only explanation is the physical cotton and the physical sugar and the physical whatever are being put on boats, and the boats are navigating around the world. So you have the prices up, the volumes up, the demand down, and this is a very peculiar crisis. This does not look like the economic crisis that we have seen throughout history. Yeah. Microphone, Radhika.
Yeah, my own question was also relating precisely to the fact that as you suggested, there was an increase in prices of commodities as a result of the Fed intervention. So it is very substantially speculative. So in a certain sense, the economic health of the various countries you are studying has now become reliant on the Fed's pumping of money into speculation. It's just quite complex, I think, makes a lot of
Yes.
policy dilemmas. My other question was really about the trade balances. That's one of my, so how are the trade balances doing? And secondly, is it that why do some countries have more domestic debt than other countries? Is it just that those other countries are so externalized that they must have dollars or hard currencies because otherwise they cannot function? Like how do you see the main reasons?
The trade balances are, we would say in Spanish, atomadura de pelo. People have stopped traveling. Tourism is important, incoming tourism is very important for the small island economies in the Caribbean, is important for Mexico and for Peru. For the rest, incoming tourism, yes, it's there, but no, it's not substantial. Outgoing tourism is very important. What has happened is nobody's traveling, so the balance is positive towards Latin America. So, so you have, it is the piece of the dead. We are all dead. So what's happened is international reserves have not dropped. They have like remained stable, which explains the rate of exchange.
Yes, very interesting.
Our imports for production dropped because we're not producing. But our exports of raw materials have remained. So you have a positive trade balance. It's a fake. I mean, the numbers look good because we are doing so badly that the numbers look positive, but it's absurd. If you recover the economy a little bit, the imports are going to grow substantially. But as long as production is not back to where it was, as long as we remain exporting raw materials and that's going on, the numbers look good. So it's a very odd situation. And yes, we have a very, it's a very delicate balance because Latin America's economic recovery is anchored on speculative prices. If interest rates in the US were to go up slightly, or if the Fed was to pass the vacuum cleaner to recover some of the liquidity it injected, then we would have a drop in prices, and that would lead to an export sector crisis. Yeah. The other problem is oil. Oil prices have fallen. You remember in April, we had negative oil prices. That had never happened in history. Oil prices are below costs of production. Okay. And that means that if you're only an oil exporter and not a gas exporter, you are going to be losing money. That's the case of Venezuela, Colombia, and Ecuador. Trinidad and Tobago. When oil prices go down, the government, because they're all government oil companies, in the four countries, in Venezuela, Colombia, Ecuador, and Trinidad and Tobago, the the companies lose money. So there is no fiscal revenue coming in from oil, from the company. But then additionally, in Latin America at least, taxes on gasoline are very important. And we're using a lot less transport. So the drop that's why I looked at the selective consumer tax. The drop in the selective consumer tax is massive because we're not using cars. So you have a double problem. And the third problem with oil is the change in the energy matrix. As we become more electrified and as Yes, as we become more electrified, the total demand for oil will be down. So the future for Colombia, Ecuador, and Venezuela does not look good unless they turn into gas. Oil in itself does not have a good future. Yeah. And this for Brazil, for example, Brazil has a bet on oil, offshore oil, that will not come true. They will stay with their towers in the middle of the ocean, but if there isn't any demand for it, they'll stay there.
Absolutely. Any other questions or comments for Oscar? Ariella, please.
Yeah, thank you, Radhika. Oscar, you showed in your last picture that some countries will have problems with debt projections, and among them you said there were Argentina, Bolivia, Ecuador, Costa Rica. And I wanted to ask you, what do you think about the role of Chinese debt in Bolivia and Ecuador? Which kind of debt and arrangement are there involved in these countries?
Mm-hmm.
Thank you.
And Venezuela, if you may. Please.
And Venezuela, yes, we can add it too. Thank you, Radhika.
The Chinese have financed in two different ways. In Ecuador, they financed hydroelectric dams. 8 hydroelectric dams. 8. That was Correa's shift to clean energy inside Ecuador. That has to be paid for. And the way it's getting paid for in most countries is with long-run commodity contracts. So I give you the money for dam construction, you pay me back in copper. That's the sort of thing. In Venezuela, I don't know what the numbers look like, but I understand it was a massive amount of future oil. So they bought 5 years of oil, paid for in cash, and now Venezuela is paying back with oil. So that's that. We have not seen yet how the Chinese negotiate their debt. So we have to yet have a real negotiation and see what it looks like. They are not going to call in the IMF. That's clear. For me, the Chinese know exactly how the power structure works in the West. So they are not going to call in the IMF. They're going to do the negotiation bilaterally and finish that. That's what they did in Africa. The Africans, for example, don't have a debt problem either. They have a fiscal problem. So we're all having fiscal problems more than external debt problems. Now, Bolivia is going to go into a crisis it has not had yet next year. So Arce will be, President Arce will have the peculiar characteristic of having been the best finance minister for 10 years and having had to face the worst economic crisis after that. That's going to come next year. If the Chinese play the lithium mines, which is what the interest of China is in Bolivia, if they play that card, what we're going to see is more money going into Bolivia to develop the lithium mines and to develop the project of China with Germany in Bolivia, which is to manufacture the batteries inside Bolivia. That's the project. And that project is backed up by a change in the education curriculum so that students that coming out from school come out being very good in physics, chemistry, and mathematics. That's a switch for Bolivian education and has placed Bolivia on a different footing internationally. That's Evo Morales' contribution to Bolivia, really. So that's what we're that's what we're expecting from Bolivia. Now let's see what else happens, no? But basically, I think the China debt is not what the West is saying about China, not at all. It has to do with real things. I buy oil, I buy copper, I give you money for this, you pay me with physical, whatever it is, at the futures contract. That's basically.
If I might add a couple of observations, since I recently finished a paper on African debt in China. China does take debt repayments in resources, so oil or copper or whatever, but this is not that we take physical oil and copper. The country concerned sells the oil and copper on spot prices and then pays China that money. So the spot prices are accepted. It's not that, you have to give us, the price of copper in a certain sense is determined beforehand. So that's one thing. And the second thing is that China is negotiating, as Oscar says, bilaterally with each country to essentially make sure that the debt repayments are sustainable, etc. And in this context, on the one hand, they face all the accusations about debt trap diplomacy. And on the other hand, they have to bear in mind that their debt concessions do not go in the direction of feeding Western debt payments.
Right.
You see what I mean? Because there are often Western debt and Chinese debt in competition. So the West is sort of being offensive, saying, the Chinese are creating the debt crisis. But the fact is, China also has to be careful that whatever it concedes in terms of debt concessions is not then used to pay back Western debt, which leaves the country concerned no better off and simply benefits. So China's concessions benefit the Western predatory financial institutions, which are typically quite predatory. So anyway, I just thought I'd make a couple of those observations.